One many photo call from mine. And so today we are going to discuss a very deep concept. It's going to be a slightly different video about opportunities and what it means in the stock market and what it means for your investing journey. So opportunities are kind of very good setup. So we have done a video about setups already, and opportunities, they come and go. And for you to be a successful investor, you have to actually seize those opportunities. But opportunities come in different size. And as an investor, you have to recognize when you have very good opportunities, or what others call fat pitches. And what's important about these opportunities is mainly that they don't come that often. So if you look at the past, and if you look at what you could have invested in reasonably, meaning given the level of information that you had at the time and your readiness to actually seize those opportunities, there are actually very few reports. I think that from my experience, what I'm seeing in the past is that I usually have one opportunity per year to make very good life-changing returns, meaning that more than 2x returns. And so you have to be aware that you won't have fat pitches every month. And so that's why I like trying to look on the internet, or like to look on YouTube and Twitter for what stocks to buy, or what should I buy this month or like today. It's actually meaningless, because the real opportunities that are going to change your portfolio, they don't come very often. And so that's why you should be prepared, and you should analyze a lot of different companies to be ready when the opportunity comes. So opportunity come when there are a lot of different factors that are creating a very favorable setup. So we have seen that with Meta, for example. Meta is a good example of what a good opportunity is, and how if you recognize it at first, you can enter at a very low price into those stocks. But that's not the only thing. Actually, what is difficult with opportunities is the fact that you have to be at the right time and with the right mindset. And that's very difficult. And the second thing is that you have to see the opportunity, but you have to keep it and to actually let the studies play over the time. And so that's very difficult, because you can buy Meta, for example, at 88, or you can buy Palantir at 7. But if you sell after 30% increase in the stock price, you are not going to seize the opportunity. So that's why you should be very careful. And so if you want to recognize opportunity, or opportunities in general, I think this comes with experience. Some people are lucky. They are going to make a lot of money from their first strike. But I think that this will come with time. This will come with experience for you. And so that's why you still have to remain level-headed, and you still have to be very analytical about the different moves that you had in the past and the different playing field that you have seen in your investing career. So the reality is that today we are seeing very few great opportunities in the market. The Liberation Day was actually a good one to some extent, because we have seen a lot of stocks retracing 2x from the bottom. So this could have been like a very good opportunity to actually enter. But the reality is that most people, they were not prepared for that. And what happened is that they did not have the cash to invest at the low, and they didn't have the funds to actually seize the opportunity. And so that's why you should always be prepared to actually seize those stocks that are coming at very good price with very good setups, meaning that they are going to recover in a very predictable way in the future. And so opportunity is actually a concept that is true in life, but which is very important in the stock market, especially if you want to make a lot of money as an investor. So this also leads to the concept of missed opportunity, and the fact that a lot of time you have missed your chance to actually get at the most opportune time. But as a mature investor, you have to recognize that you cannot be right all the time, and that sometimes you are not going to buy at the very bottom. And so a mature investor is going to recognize that, and seeing the opportunity, having the kind of intellect and the kind of maturity to buy at a higher price, knowing that the opportunity has not fully developed yet. So there are a lot of examples that could actually have played out in this way. But as an investor, you should not be afraid of buying up or averaging up into those very important opportunities. But you have to remind yourself that not everything is an opportunity. Not every stock that you are seeing, even stocks that are 2xing, they might be traps. And so that's why you have to be very careful into what you invest, but also if it fits your temperament, because opportunities are going to test you along the way, meaning like all the stocks are going to go up and down. And so you still need to build a conviction that your thesis is going to play out in the coming years, and that what you're investing in is actually going to grow, and that more and more people are going to recognize your thesis as played out. And that's one of the most important things into an opportunity and a great setup, meaning that there is kind of a contrarian view and that you are right in your contrarian thesis. If you're not right, it makes no sense. And if you remain contrarian, even if you're right and nobody realizes that you have been right, you're not going to make money. So that's why you should always think about these aspects of being able to have a thesis, but a thesis that's going to be played out and is going to be recognized by the market at some point. Then the next step about recognizing opportunity is how you will allocate your funds toward this opportunity, meaning how you're going to size it, meaning how you're going to seize the opportunity and make it life-changing if it plays out. Because what you have to remember is that because you have so few opportunities in your life, so let's say that you're going to invest for 20 years, most likely you will have 20 good opportunities. And so definitely you have to be careful of how much money you will invest into these opportunities to keep a significant level of margin of safety, but as well having or being able to have significant returns if this plays out. So, well, I would say that we have seen already in a portfolio, we have some kind of rule of thumb that you should not allocate more than 20 or 25% into one single ID. And I think that this still is kind of true. And so you should try to keep that in mind, but try to keep in mind as well that if you have a great ID where you have a lot of conviction, then you should not allocate only 1 or 2%. I'm seeing that so much in the market today on YouTube or on X. A lot of people are talking about all these ideas, and when you look at their portfolio, it's only 1%. So it's not going to make any difference at all if their thesis is playing out. So this makes sound a bit stupid, but the reality is that a lot of investors are doing that, allocating 1-2% into their best IDs, or at least into IDs that they think is going to 10x. But if you think that it's going to 10x, really, it makes no sense to invest only 1 or 2%, unless you are a venture capital and that you have 100 IDs that are going possibly to 10x. But the reality is that when you have great ideas, you have to allocate at least 10% of your portfolio, because most likely in your portfolio today, there are not 10 incredible ideas or 10 ideas that come from great opportunity and great setups. But because you don't know and you cannot have, I would say, invested into great opportunities at all time, so obviously you have to diversify and you have to actually start position and seeing how theses are playing out. So you're not always sure at one moment of time if the opportunity that you are seeing is really an opportunity. And so you have to grow your positions with time. And that's how mature investors are doing, and that's how actually pros are doing. And so as an investor, you still need to internalize this type of thinking. And with time, you will see that you will be able to allocate more significant amount of your portfolio into your best ideas. And I think that's how you are successful. But you still need to be reasonable, meaning that you should not go beyond 25 or 30%, because if you're wrong on what you think is a great opportunity, then it's going to be very tough to recover from this mistake. So now, just to show you that opportunities are great, so recognizing them is a first step, but the second step is being able to allocate the proper amount of funds towards these opportunities to be able to have a significant impact on your portfolio and on your financial life. Another key concept about opportunities that I want to discuss with you and that I've learned from my 10 plus years of investing is that opportunity arises from uncertainty. And so you will never be sure that you are right when you are getting into an opportunity. Why? Because there are a lot of uncertainties, and that's what creates the opportunity. So as an investor, you have to think independently and you have to build conviction. You have to build a thesis, meaning that you think that these things are going to play out and all the participants in the market are not seeing them today, and that tomorrow they will realize that you were right all along and that what you predicted has actually played out. And so that's a very important concept, because if something is consensus, it is by definition not really an opportunity, because everybody agrees and there will not be, a repricing of the asset. So all the opportunities come from very topical or very battleground stocks. That's, I think, the main reason why these opportunities arise, because some people are bearish and some people are bullish on the same stock. And so you have a confrontation of arguments, confrontational opinion. And we have seen that with Tesla, we have seen that with Palantir, we have seen that with Meta. It's always the same. Some people are convinced that the stock is going one direction and the others, they are seeing a very different things. So I think that the best opportunities always arise from very polarized sentiments toward one stock. And so that's how you can recognize where opportunity lie. And so as of today in the market, so there are not a lot of these stocks, because a lot of things have played out, for example, for Palantir. But if we could actually find one stock, I think that United Health Group is actually kind of having the same characteristic of what could be an opportunity. Having said that, well, you should actually do your own due diligence. This is not financial advice, and you should actually look more into it. But if you look just at the characteristic, the fact that it has dropped more than 50%, a lot of people thinking that it's kind of a dead company at the moment. So what we are seeing is that this could be an opportunity. That's just an example, but the lesson that you have to keep in mind here is that opportunities arise from uncertainty and a lot of negative sentiment. That's how these assets, they reprice higher, and that you generate the returns that you need in your portfolio and to actually change your life. So your job as an investor is to recognize, seize, and hold these opportunities. And indeed, we've seen that opportunities are quite rare. You will not see them like every month or every day. But also, you should keep in mind that you don't need to be perfect in terms of timing, because these opportunities are so big that you have time to get into them. You might miss like the first 10 or 15% in those entries, but the most important is for you to recognize the potential and to be able to seize them. And also, most importantly, to actually stay in those names and let them realize their full potential. So this comes from experience. Also remember that these opportunities, they are of multiple types. So this comes from your analytics framework. Sometimes you are more comfortable with like value investing or growth investing, for example. And these are different types of opportunities that you can see in the market. And even better, if you're an experienced investor, then you will be able to leverage both of them. And I think that this is where you can see like deep value in some names where you can actually anticipate the future and a repricing in both in terms of EPS and in terms of valuation. But you also have opportunities like Palantir where you have growth ahead, which is actually not priced into the name, and that you are one of the few being able to actually see the future and the possible valuation expansion. So there are different types of opportunities, but the most important for you is to recognize them. So this is one of the factors for you to have life-changing investing and to actually succeed in investing and to have great success with your portfolio. So you have to recognize these opportunities, you have to seize them, and you have to hold them for a long enough term that you will be able to realize the potential and get the gains in your portfolio. And if you want more analysis and investing wisdom like this, so please check my other videos and please subscribe, and I see you in another one. Bye.